What's going on YouTube? In this video, we're going to go through 3M company financials and figure out what this thing is currently worth today. Year to date, this company is down 30%. Over the course of 1 year, down 24.3%. One interesting note is that this thing only has 2% of short interest and 6.9% of dividend yield. So pretty healthy dividend yield over there on 3M right now. They also report their earnings tomorrow morning in the pre-market, and we can see analysts aren't expecting aren't expecting very much, aren't thinking very highly of 3M right now. They've got 13 analysts revised down. One analyst has revised up. 3M has had two separate large lawsuits, one for $6 billion and another one for $10.3 billion. Both have been settled, but they still have about $17 in lawsuits to pay out. So now we're going to hop over here to the financials on 3M. We got our revenue, gross profit, net income. So revenue and gross profit, just basically a flat line. Net income, we can see, is dropping off a cliff, falling off a cliff there. And that is all attributed to these lawsuits. Those lawsuits get placed under SG&A, and we can see that has doubled their SG&A expenses. And but once we get down to the cash flows, we can see that gets added back in and does not come out of their free cash flows. And we can see that overall the business, if we eliminate the lawsuit, their free cash flows are staying consistent, which kind of tells you our business is still holding up pretty well. So gross margins have shrunk over the course of time, sitting at 43.9, but however, net margins have held up very well. Revenue, gross profit, year over year change. This company just really does not have a growth rate tied to it. It is just a flat, maybe 1-2% grower back and forth, up and down. Return on invested capital has been very good in the past, obviously not right now. PE ratio has declined over time. Currently, forward looking, we're looking at about an 8.8 PE, but obviously we are negative because we have negative earnings. Cash to short-term debt. This company's got a lot of short-term cash, or sorry, a lot of short-term debt and not a lot of cash. They've got cash debt over here, $41 billion in total liabilities and only $4.3 billion in cash. So here's what I'm talking about is our net income is negative, but our free cash flows are still actually pretty good at positive $4.4 billion. And we'll go through the most recent earnings release and kind of walk through those a little bit as well. Our share count dilution is, declining slightly. Dividends were on a pretty good track record higher, but have leveled off. Probably not going to go up anytime soon either until these lawsuits get paid for and covered, and then they can rebuild up their financials. Capital expenditures, slightly higher, but still not too far away from where they have been. So we're over here on 3M's financial statement. And under SG&A column in the last 3 months, we used to be about $3 billion in SG&A. Now we're at 12.2. This increase is from lawsuits and will eventually resume back to normal, at least 3 billion roughly ballpark for SG&A. So then we come down here, we get a net income loss of $5.8 billion, and then get to add back in that SG&A or that lawsuit cost of 10.6. Well, I mean, I'm sure it's not 10.6, it's maybe, $9-8 billion, whatever the number might be. It's placed under other here. So that gets added back into cash flows. So then we can see our free cash flows actually have increased year over year. Also, that is attributed to this as well, deferred tax income. So because they were negative on net income, they were able to defer taxes out. So then that shows as a negative to the free cash flows, but a positive to the net income. So they get to deduct that out, and then obviously, so you add 10 billion back in, you remove 6, and then you remove another 2.5, you're left with $2.8 billion roughly. Those are the big numbers on the cash flow sheet here. $2.7 billion minus off $852 million gives you a $1.9 billion free cash flow in the last 6 months, or $3.8 billion free cash flow annualized. Now, 3.8 plus 4.3 in cash equals $8.1 billion to pay off short-term debt. But we've got $11 billion in short-term debt, and I would also have to assume they're going to have to pay back some of that lawsuit soon. So then that's going to create more stress on their financials and on their cash position as well. So I would have to assume that there's a chance that maybe, I don't think the dividend's going to be at risk, but I do think they're going to have to find a way to raise capital, whether that's through issuing more shares or if it's just issuing a loan of some kind to pay back or payouts to pay off some of this debt and pay back some of the short-term liabilities as well. So over here at the calculator spreadsheet, I use their forward-looking EPS and forward-looking PE ratio for our spreadsheet calculator because we are currently negative EPS and PE. So Peter Lynch valuation gives them a price tag of $13.14 per share. I did not find any real good comparables to Triple M. So if you know of some, drop them in the comments below and we can address that going forward. Manual PE sitting at $47 billion market cap minus cash plus debt divided by cash from operations gives them 13 years to earn their current market cap. So price to book, 5-year average 7, currently at 6. Graham's valuation gives them $86.22. Our dividend discount model gives them a price tag of $86.65 per share. Discounted cash flow valuation, I gave them a 0 for their growth rate on free cash flow. That gives them a DCF price per share of $174.51. Rule 72, I average their EPS growth rate of what, 1.5. Historically, that's about where it usually is, and that gives them a growth rate of an average growth rate of 1.47. And then that goes into 72, 49 times. That goes into 10 years, 0.2 times. So basically, our EPS will likely not really grow. So that'll give us a future EPS of about 9. So that gives us fair value of $6.62 per share. At the summary page, Triple M currently trading at $85.60 per share. Our fair market value on this company is $70.12. 30% margin of safety, $49. Analyst price target of $116 per share. Over at the stock chart on 3M, we are just locked in this downtrend. And because we are just selling off so heavily, I see this thing possibly coming down to about 70-ish dollars per share. And then before we maybe see some sort of support where this thing might chop around for a while and then maybe resume higher potentially. But I would not step in front of this thing until it breaks this trend. This is a very steep downward trend that I would not want to be in part of. I mean, you can see what happens when you're locked in these trends. Until you break, such as like right here, then that's when you sell. So you're kind of locked up in this uptrend here, and until you break, you don't sell. And then, oh, you broke through, you sell. And look at that selling pressure. It sold all the way off to $98 per share. Granted, that was 2020, but, and then same thing here. You draw this trend line here, you do something like that, and you don't sell, and then, oh, you broke through trend, you sell, and look, everybody and their mom is selling 3M right now. So that's what I'm looking at on 3M. I don't see a reason to step in front of this until this thing potentially hits $65 to $70 per share range. Then maybe consider a position. But even then, I would still be kind of cautious and make sure the financials are still holding up okay at 3M. They do have quite a bit of work to do before I think they deserve your money. But that is it for this video. If you found value in this video, drop a like, subscribe, comment. We'll be back later with our stock analysis video.